Financial institutions face increasing pressure to make faster credit decisions while maintaining strong risk management and regulatory compliance. Traditional credit assessment processes often involve multiple systems, manual reviews, and limited visibility into the factors driving lending decisions. In this demonstration, I'll show how our AI credit risk scoring solution accelerator combines machine learning, predictive analytics, and explainable AI to assess applicant risk, identify key risk factors, and support more consistent lending decisions. We'll review the business workflow, walk through the application, examine the AWS architecture, and explore the business benefits of AI-powered credit risk assessment. Let's start by looking at the overall credit risk workflow. The process begins when a customer or business submits a loan application. Along with the application, supporting information such as income details, employment information, financial statements, and credit bureau data is collected. Before scoring occurs, the solution validates applicant information through a series of verification processes. This may include identity verification, income validation, debt analysis, and external credit bureau checks. The validated data is then passed into the AI credit risk engine. Using machine learning models and predictive analytics, the solution evaluates multiple risk indicators and calculates a credit risk score along with a probability of default estimate. In addition to generating a score, the platform identifies the primary factors influencing the risk assessment, providing transparency and explainability for both business users and regulators. Based on the resulting score, applications are categorized into risk segments such as low, medium, or high risk. The final recommendation is then presented to an underwriter, who can approve, refer for additional review, or decline the application. This process enables faster decisions while maintaining strong governance and oversight. Let's look at the solution in action. Here we are on the main credit risk dashboard. The dashboard provides visibility into incoming applications, portfolio risk distribution, model performance, and decision outcomes. Let's evaluate our first loan application. For this demonstration, the AI model analyzes 4 key underwriting features: annual income, existing debt, employment history, and requested loan amount. These inputs are sent to the AI credit scoring model for real-time risk assessment. The AI credit risk engine then analyzes the application. The model evaluates multiple factors including income stability, debt to income ratio, credit utilization, repayment history, employment tenure, and overall financial profile. Within seconds, the solution generates a credit risk score. In this example, the applicant receives a high score, which corresponds to a low risk category. The probability of default is also calculated and displayed to support lending decisions. One of the most important capabilities is explainability. Rather than producing a score without context, the solution highlights the key factors contributing to the assessment. In this example, strong income stability, a low debt to income ratio, and a positive repayment history contribute positively to the score. Let's evaluate a second application. Compared with the first applicant, this borrower has significantly higher debt relative to income, a shorter employment history, and is requesting a larger loan. The AI model predicts a higher probability of default, resulting in a lower credit score and a more conservative lending recommendation. The system highlights the primary risk factors and, when appropriate, recommends that the application be referred for manual review. Underwriters can use the AI-generated explanation alongside their organization's lending policies to make a well-informed final decision. This creates a balanced approach that combines AI-driven automation with human oversight, helping improve consistency while ensuring experienced lending professionals remain in control. Let's take a brief look at the AWS architecture behind the solution. Applicant and credit data are securely collected and stored within AWS. Relevant data sources may include internal lending systems, customer information systems, and external credit bureau services. The AI credit risk engine is powered by Amazon Bedrock and machine learning models that evaluate applicant characteristics and generate risk predictions. Business rules and decision logic determine approval thresholds, risk categories, and escalation criteria. Explainability services provide transparency into the factors driving model outcomes, helping organizations meet governance and regulatory requirements. Applications requiring additional review are routed to underwriters through a structured review workflow. The architecture is designed to support enterprise-scale lending operations while maintaining security, auditability, and compliance. Organizations implementing AI-powered credit risk scoring can achieve significant operational and business benefits. Loan decisions can be completed in minutes rather than hours or days, improving customer experience and reducing operational bottlenecks. Underwriters can focus their attention on higher risk and more complex applications rather than spending time on routine reviews. Decision consistency improves because all applications are evaluated using the same risk framework and scoring methodology. Explainable AI helps organizations understand and justify decisions, supporting governance requirements and regulatory expectations. The solution can also help reduce credit losses by identifying risk patterns that may not be immediately apparent through traditional manual review processes. Additional benefits include improved portfolio monitoring, faster onboarding, reduced processing costs, and enhanced visibility into overall lending risk. Ultimately, the goal is not to replace underwriters, but to equip them with better information and better tools to make informed lending decisions. Thank you for watching this demonstration of our AI credit risk scoring solution accelerator. If your organization is exploring AI-driven lending, risk management, underwriting modernization, or explainable AI initiatives, we'd be happy to discuss how this solution can be adapted to your environment. To learn more, request a demonstration, or discuss a proof of concept, please reach out using the contact information provided. We look forward to helping you accelerate lending decisions with responsible and explainable AI.